Entries are the most discussed, most difficult, and also most critical elements of our trading system. I'm a Stacey Burke style trader that enhanced his system with some other elements. I will show you in this video in detail how I navigate through a session, what are the specific elements I'm looking at, and what triggers my final entries to produce consistent, profitable outcomes every day. Stay tuned. So how am I thinking about entries? Here is the end-to-end entry funnel, how I call it. So first, as we also discussed in the last two videos, if you haven't watched them, I would strongly encourage you to do so, either after this one or maybe even before. First question you always have to ask is, do you have a setup? So in my terminology and in my approach, the 8-hour and daily bias aligned? Are the higher time frames aligned? What's the setup on the day? Are you in a parabolic reversal or parabolic continuation situation? Then the check. Always discuss this with yourself. Are we up high? Are we down low? Does this fit to everything you have been thinking of in your thesis generation? And then where's the money? So which traders are trapped, which are in profits? What would be the next logical move for the market to take liquidity from the market? On all time frames, on the very high time frame, on the middle time frame, and then what we will discuss today, especially on the lower time frame. Then, if you have a clear picture on, do you have a setup? If you have a setup in mind, as I always say, then you have to think bottom up again. So bottom up on the day, but also especially bottom up in the session. You need to be extremely open in the session, and then you think especially timing, level, behavior of price. Stacey's major terms, they are so good. That's the key to everything. Timing, the clock, levels, where are you level-wise, and what does price do? As long as you don't have that, you don't have anything. If this doesn't align with your setup idea, you have nothing. Then during the session, you check, is the session trap in already? Who's trapped? Who are we punishing? And if you don't see the trap, there's nothing to do. If no trap, no entry. Where is the 8-hour and the daily level according to price at the moment? Where are we trading? Are we breaking out of the 8H? Are we below? What does it make sense? Then time rotations, where are you within the session? This is extremely critical. I will dive into that in very detail afterwards because that's the key to everything. Then for an entry, you look at M5, M15 fakeouts. So if everything is aligned and it looks good, depending on time rotations, you also want a very low time frame continuation confirmation so that traders are trapped over the next couple of minutes at least, or maybe the next 15 minutes or so, to give you a safe entry. If you have a nice 5 or a 15 minute fake out and you trade away from it, this gives you a safe entry that you at least get to break even comfortably or have a one-to-one trade or something. Then you want to see action. You want to see engulfment. You want to see price accelerating, trapping. You want to see switch candles, death candles, something that's happening. Not to trigger you in, but to lock something in. That's the key thing, that it pulls away from something. Not that you kind of chase it, not chasing. This is not what you should be doing. If price does something, you don't want to be triggered in by the movement, but you want to see that others might be triggered in, and then the lock move is something you want to see, that you are helping the market to trap someone else. That's the key thing. This is what you have to think all the time. Then behavior of trader. Everything is aligned and you're at the last very moment of your trade, of your entry. Then a final check. Are you calm and clear at the moment? Are you in your planning mindset, or are you revenge trading? Do you want to take a trade? There's a lot of elements that can make you chase the market. Are you really calm? Then no counter teases, very important. In the last moment, just check the counter teases. Could this be a trap? Could you be trapped? Or is the trap somewhere else? Is the counter thesis as good as your thesis? Then leave it. You really need a clear thesis. And it's very helpful to just play around with counter thesis all the time. If you have a thesis, immediately think about the counter thesis. Could it be the other way? Are we in a parabolic day, or is it a reversal? Sometimes it's not clear until the very last moment, and then you need to wait for the low time frame trap to confirm the one or the other direction. Then, is it fully planned already? Is your risk reward 3 or higher? That's my criteria. If I don't find a nice trade management plan for my trade that gives me at least R3, I don't take the trade. That doesn't make sense. And then, final thing, to keep out of tilt, are you prepared to lose? Very important. Keep in mind what your R is and already kind of think of losing the trade. So every trade can fail. And if you're not prepared to lose, you might do stupid things. So many do the trick that they expect to lose. So they go into the market, they expect to lose, and then they lean back and wait what's happening, and everything that's positive is a positive surprise. That's a trick. I don't do it, but it's possible. So let's look at how I structured originally in my playbook the entry funnel according to the stuff we discussed the last 2 videos. So we discussed in the last video especially the setup on the day. So you have a very specific pattern, 3 sessions setup on the day. It can be low-hanging fruit, parabolic day. So you have the low of session, low of day parabolics in short setups, and you have the high of day, high of session, long squeeze reversals, as we discussed. You remember. If not, please check the last video. Depending on these setups, you want to see completely different things for final confirmation, of course, because a reversal, high of day reversal setup, as we discussed last time, you want to see 3 levels of rise, low, low on the inside. You want to see working the high head and shoulder pattern, potentially a descending triangle. So this is a set of elements that make sense. I broke this down specifically to the specific setups on the day. Won't go through it in detail now. You can pause and read if you like. And then the parabolic continuations, as you see, it's a completely different thing. There you want to see a descending triangle, parabolic channel. That's the parabolic patterns you want to see. They are completely different than the reversal patterns. And once you are clear about that, I mean, low-hanging fruit is a bit different, of course, because this can be many different things, of course. But once you're clear about that, then you kind of confirm the 3 sessions setup for the day, and then you dive into the triggers. And triggers for me is kind of the last things you want to see before you then enter the trade. Before I was looking at 3 pushes, break in structure. You want to see a manipulation. You want to be at time rotations, key level. You want to have an engulfment and then the acceleration, and then that's it. Then you go in. So that was my overall approach before I enhanced my system. It's still valid overall, but we will now dive much deeper into the final confirmation and into the triggers especially. So before we dive into multi-time frame, how we trade that, intra-session setups. So as you know, markets are fractal. So you will see within the session similar setups than you see on the daily and on the 3 session setups. It's the same thing over and over again. And you have to be very aware what the session does along the hours. 1 hour, first hour, second hour, third hour. Do we have 3 hours of rise? Same setup on all time frames. 3 hours of rise, hitting 8H, faking out the 8H, faking out the second hour, nice reversal, intra-session. This alone can be a setup already. You don't need any higher time frames. If this is nice, you just trade it back to the low of the session and you're done. Or working level coiling, breaking out, working back down, 45 minutes, working a level, think it might be locked in, then maybe a fake out low on the lower time frames, you are above the 8-hour level, boom, third hour just blows to the top. Very nice pattern. Or this is one of my absolute favorite patterns that I trade every day, and we will look at this in very detail going forward. It almost doesn't matter what the first hour did. It's better if it's neutral, but if not, you have a bias to the one or the other side. But then, as you know, I let equity open hit before I do anything. Sometimes I take trades from equity open, but rarely. Because what happens after equity open? You get the open box, as I call it. The first 30 minutes after the open is the typical trap. And very often you even see that it traps the longs, traps the shorts, and then in third hour you get the move. Either within this box, or then very often with one full expansion of the box level. So this, you project one level, one X expansion up, and then you have either a target for a trade, or you have an entry confirmation for a reversal trade. Look at that, backtest it. I will show you a couple of examples. This is so strong because this box here, it traps longs and shorts with a very fresh, high volume impulse. So these traders are boxed in, and then you get a very high probable pattern away from that. Trading away, staying inside, there's a couple of variations. I will show you those. Now I will show you one of my most important tools I invented myself. This is kind of the story of the session. You always have to think as you trade along a session, what is the story of the session? What do they want me to believe? Where is the trap? And you will see this structure guides you through every session, every trading session. In my playbook, I have it in more detail and explain it deeper. Here I will focus on second and third hour and on the things that are relevant for us for the moment. So first hour trades, as already you could do a video only on first hour. We won't do that now, but first hour sets up. And then you get the 8-hour close. So for me, how to think about this, you see here, you have previous day high, you have previous day close, you have previous day low. These previous day levels, they set the strike zones. So they kind of box in the session and give you orientation where you are concerning these levels. And as Stacey also often says, you take the trades from the levels. So you really need to know at least how you trade according to that. And in the best case, you trade engulfments of these levels, or at least very close to them. Then first hour sets up. So first hour sets a high and a low. I always have the first hour high and low on my chart because this is the initial balance for the session. So you really want to be sure to know, are we trading inside the initial balance? So are we in a ranging situation, or are we breaking out and in a range expansion situation? It's very important to know. Then the 8-hour close fixes the anchor levels. As you know, I always look at the 8-hour levels. 9 o'clock, end of first hour, the 8-hour closes and locks in the 8-hour levels. This is my reference points. The 8-hour gives my trades. Then equity open sets the trap. Equity open comes in. Sometimes you have a trade from the 8-hour close. 9 o'clock, it's mostly the trap moves. Sometimes it's the real move. I don't take those trades anymore because sometimes, of course, you get a spectacular move, but very often you get trapped. And once you get stopped out already that early in the session, you are at high risk that you are in tilt very relatively soon, and then you will not be at your best anymore in third hour and you miss the real trades. So what I do is typically I just don't look at the charts until 5 minutes to 10 o'clock. I come to the screen and 10 o'clock is the very first moment where I'm even considering a trade. And this was a decision I took half a year ago, that I don't take trades anymore before 10 o'clock. And this improved my trading even better, even more massively, because you're in absolute perfect mindset at 10 o'clock when the real sweet spots happening. You're fresh, you're not stressed, you don't have any stop trades, you're in full focus, and in the next 15-20 minutes I take a trade typically, and these trades, they hit home. Then equity open sets the trap, as I said. So you get the trap move mostly with equity open. Sometimes in one direction, reversing, sometimes in the other direction, reversing, sometimes both directions. Why would you get into these meat grinder? It doesn't make sense, because it's so often it just traps you. Why not wait until someone else is trapped, until you see the trapped, until you see the open box? I will show you this in a minute, and then you trade away from it or back into it. It's very clear, but as long as the market didn't show its hand and you don't have the data, it's gambling. It's just gambling and chasing stuff. You just don't know what's happening. Sometimes, yes, you have a very clear high time frame parabolic situation, and the channel already is clear into the session, and you can even take a first hour trade. It happens. Sometimes I do it, but it's better not to do it, because you're chasing large things. You want to take a large trade, and this very often leads to disaster. Then third hour shows the trade. This is the trades. You look at the green bubbles, that's the entry sweet spot. You look at time rotations, 10 o'clock, 10:30, 11 o'clock. So it's very important. Watch the clock every 15 minutes, every 30 minutes, every hour. New traders come in of this time frame, and they take a decision. They go either long or short. And if you are in before that, you don't know what's happening. 10 o'clock here is very often a pivot point, back tested. It comes up to 10 o'clock, and if you think now, a bit before 10 o'clock, this might go on. 10 o'clock, new traders, they reverse it down. Death candle, you are trapped at the high and stopped out. Why not wait until 10 o'clock? Wait for the death candle. Wait for the others to get dropped here, and then you take the long squeeze once it comes back in. So really, this green area is the area where you want to take your trades. Sometimes it's even 11 o'clock. Sometimes the whole session is a trap, and the trade move afterwards. This happened a lot in December. And also at the moment, we experience a lot of very late trades. That's fine. Just be patient. Sit on your hands, as Stacey always says. If it's not clear in this green area, wait until after session. And if it's not clear, then leave it altogether. Just look at your criteria. If nothing aligns, you just don't take a trade. So let's look at how I think about it with multi-timeframe trading. So you've seen this thing in the last two videos. Every video I push it one time frame lower, and you see it's always the same. This times to make it even more clear, I made it a higher time frame bearish situation, because that's the real trades I'm looking at. Higher time frame bearish, like a daily breakdown, then a 3-session pullback, and then a daily low-hanging fruit trade. So you take the reversal back into the back into the higher time frame trend. That's the major trade of my system. So let's look at that. Breakouts, breakdown, show the trend. We discussed it in the last two videos. So daily breakdown, bearish. Then you have an 8-hour fake out low potentially. That's bullish. It trades up. So nothing to do. 8-hour daily not aligning. So this is kind of boxing in. It's coiling. There is no trade to have. You could go long here, but then you crash into the daily breakdown. Why go short if you're in an 8-hour fake out low? So there is nothing to do. Then you have the first hour of the session. First hour high and low, that's the H1. You get a first hour breakout. So that's bullish. Then you're trading into the New York Open. Here is the open box. It traps down, it traps up. And then 10 o'clock breaks out, maybe even. Then you have an 8-hour breakout, opening box breakout, lower time frame, completely bullish, maybe even overextended. Maybe you get then 3 longs on the H1 and the H4. Overextended situation on the day in the session, but higher time frames bearish. That's interesting. So what are you waiting for? You're waiting for that the lower time frames become bearish also. So we show fake outs, show the traps. So you want to see a fake out to the high if you want to take a short. Timing gives the rhythm. Wait for the 30 minutes rotation, at least 15. Then to finally confirm, in the session we want to have 8H, H4 and 1 aligned. So as long as the 8H is in breakout, I never take a short. So I wait until it loses that. And then I also check, of course, H1. Here you see H1 fake out, H4, H4 fake out. And then I go to the very low time frames. Here I'm already set up green, set up confirmed. And then I have to think about the entry. In the entry, there's a couple of variations. I will show you those. And the entries are confirmed by levels, by the M5 and 15 closes. So a close of a candle gives confirmation and acceptance in the new area, or lower time frame fake outs, 5 minute, 15 minute fake outs. They trigger the entry. So potentially I take the trade if I like it, as it crosses the 8 hour. Then you are already here, but that's very aggressive. Then maybe you take the trade once it closes a candle, 5 or 15 minutes, because this signals acceptance here. But it might be that you are already too far away from the 8 hour. A real confirmation would be if you get another 5 minute or 15 minute fake out high, trapping longs again, people they're buying the low here, and then you lose it again. Maybe you lose even the open box, and then this is the very nice late session continuation trade, backside of the day, backside of the session. Everyone else is already chopped up and you take the trade, 15 minutes, 30 minutes, take the money and go away. So what are the two variations? I now show you the reversal entries and I show you the continuation entries, and then we go into details and examples for each of those, and also I will show you an example of no trade. That's also very important that you know once it's conflicting, what are the things that you want to see, or that if you see them, you just don't take a trade. I will show you that. So, but here first, multi-time frame reversal situation. So you want to see, of course, a higher time frame bearish pressure. You want to see a 3-session setup on the day that's overextended, or in any case signaling a reversal. That's your setup thesis. You're coming into the session. Then what you want to see here is a trapping pattern. There's a couple of variations of these trapping patterns, but you really need to see the trap. So it's an M pattern, maybe 3 pushes to the high, descending triangle potentially, working into a level, half Batman, that's the classic ones. But something working into a level or something, trapping traders above, and then switch candle pulling away from it. So what are the considerations along that? So higher time frames bearish pressure, as I said. You might come out of an 8 hour, 4 hour fake out low. Then be careful. But then it could be a parabolic situation. Trapping shorts, trapping longs, coiling sideways, blowing either direction. So if you have an 8 hour fake out low, a fresh one you just came out from, be careful, or just trade to it, not through it. Then if you get this pattern, do you have an 8 hour fake out from a previous candle potentially? As we've seen in the last video, once you have an 8 hour fake out here, it trades back down and then shows a trap on the lower time frames, then you might be a bit more loose with your criteria. Then you might already go with a lower time frame fake out once you have on the day already an 8 hour bearish biased fake out. Then it could be overextended, as we just seen in the last example. 3 hours to the high, or like 3 hours of high of rise, or 3 sessions of rise. This is overextended on the day. This is very nice as a confirmation. Then is it a late A top, as I call it? So if you have a 8 hour fake out high, but it's a kind of a deathline setup above the 8 hour level, then you need to be careful, because sometimes if there's a lot of volume on top, it could be that this is trapped, but it also could be that it just traps the shorts and then goes long. So if you have a late A top, be careful. It can be traded, but then the entry needs to be more conservative. Then a couple of variations of the entries. I already showed them. The very first one, the most aggressive one, is just the 8 hour cross. So if it's perfectly aligned with time rotations and everything else looks nice, I just take the cross. maybe wait a bit until it goes over it. But once the trap and everything looks nice, I just go into the trade. If it aligns with 10 o'clock, 10:30 or something, I just take it. Because if you're not in a very parabolic situation, especially in New York, if you don't do that, the close of the candle, like a M15, M5 close, it might be too far away. Or at least then you have to trade differently, because you want to have your stop loss above the high or behind the 8H. If you take it that late, it's tricky with the stop loss. You have to place it behind the candle or something, but it's possible. But this M15, M5 close only works if you're close to the 8H level. Then time rotations, as I said, where are they? I only take trades typically at M5, M15 or M30 time rotations. In between, it's risky. Then the classic entry that I would typically recommend, and this is the very classic pattern: 3 to the high, engulfment, first mouse, 3 pushes back up, engulfment. This is the safe entry. And this one here you can identify. I don't trade pushes anymore, but if you have an M15 or an M5 fake out high here on the lower time frame, lower than this structure, this is the perfect entry for a continuation. Then I'm looking at a couple of other things. I will show you this in the examples. You don't need to do that specifically. I look at the EMA, 20 EMA as Stacey. You want to cross it. You don't want to have this in front of you once you take a trade. Same with VWAP. I have a couple of momentum indicators. In the very last moment of my trade entry, I switch them on just to see where they are. Does it make sense from a momentum perspective? Do I have these things either in my back already, or I'm very far away, overextended, and trade towards them to make my take profit with them? That's the two major variations. But you don't want to trade through that, only in very strong parabolic situations. You don't really want to have the space of your trade shouldn't cross those levels. Then I'm also look at out of balance situations using TPO charts. So if you are in an out of balance situation, you typically don't want to counter trend that. So you really want to see that it crosses the value area again for a reversal, or in a continuation that you are on the right side of the out of balance situation. I have specific videos on that. I won't go in detail. Then your final check is risk reward for this trade above 3. I will show you how I plan my trades in a minute. There's a couple of variations, but you need to find a plan with R3 that you trust, that looks good, that confirms everything. Only then you have a trade. And for reversals, this is one of my very most important terms I'm considering in the last moment. Is this too obvious? Because, as you know, I mean, if it's obvious, it might be the trap. So maybe, and you see that often, especially with reversals. I'm very careful with reversals. Very often this looks like a trap. It pulls down, but then the whole structure is the trap, and it just pulls up from there. You see that with gold often. You can feel it a bit with time rotations. If it's a bit early in the session, you just look at it, and sometimes you already hear that people are trying to short it, and then you don't short it from here. Just last week I took a nice long trade on gold. Everyone was shorting it, and down here I thought, wow, that's too obvious, that won't follow through, and it just bought it here, waited for the 5-minute fake out low, and then it just made another leg up and trapped everyone on the short side. So really, in the last moment, think about who's trapped. What's the trap? Is this a trap, or are they building a trap below here? It's not always clear, and the criteria don't always save you from being in the wrong thing. Also, your intuition is very important there. Don't take the obvious one. Don't do what everyone else does, because this is what the market maker and the market takes advantage from, and they just pull away from that. So that's reversal entries. Now let's look at continuation entries before we then go into the details. and examples. So continuation entries. Now for a continuation entry, of course, we want to have the whole setup in the other direction. So higher time frames bullish in this case. Do you have higher time frames bullish? Do you have a parabolic bullish setup on the day? Once you don't have that, you'd never consider a breakout trade or a continuation trade. This is prerequisite for the whole thinking. Then trapping variations. In this case, what you want to see here, continuation trap, a W, 3 pushes back down into a level, working back into a level, like trading 45 minutes into this level, an inverse half Batman, just bang down and then going away from it. There's a couple of patterns, you know them, they are classic. This is what you want to see here, but that's not everything. Then you start thinking again. If you have a fake out low here, you want to have a M15 fake out low. If it's a parabolic situation, sometimes I take the breakout. But this needs to be very nicely aligned with the 1 hour time rotation, and it needs to be a very parabolic setup. And it's also, some pairs are better for that, like DJ30. I love to take this off the bat with equity open sometimes. You have pairs that are more explosive than others. You have to find this out yourself. Then if you don't take the aggressive option, you take the conservative one, and that's the M15 fake out low continuation. This one you see very often, and I will show you an example of that. So once you are broken out, my indicator will flash you 3-star, 2-star continuation setup. That doesn't mean you just jump into it. Then you wait for it to work back down, trapping shorts, making a fake out low, and then you take the continuation long. Then further considerations. Do not counter trend out of balance. Same thing in the other direction. Not overextend it. So you don't want to have 3 days of longs, 3 hours of longs, 3/8H of longs, because then it's not parabolic enough anymore. You really want to have the bullish pressure for an explosion. If it's overextended, it might still go higher, but then I would be very careful. Then time rotations, same discussion. How close are you to the 8H level? It's not that critical in this case, because you make a structure for itself to make the stop loss below, but still it's nice if you are close to it, because otherwise you might have another leg back down to the 8H level. Then again, EMA, VWAP, where are they? Did they follow already? Did you dip through them? Especially VWAP for trending markets, you know, it retests VWAP very often. So if this trap is on the VWAP, perfect. If it broke through the VWAP, I would wait for it to reclaim it. And then final consideration, risk reward. Again, is it above 3? Then you just hit the trade. And then here, one of my favorite quotes of David Paul: the good trade is the hard trade. This is especially important for continuation trades, because the good thing with continuation trades is you are buying high, and I love to buy high or sell low. This is what really distinguishes me from other traders now. And you want to do things differently. You want to know when to buy high, because most people are not doing that. They are selling the high. And if you buy the high in the right moment, you get a very explosive move away from them, because they are trapped and their liquidity fuels the move. So the good trade is the hard trade. This feels very bad to buy it up here, but that's good. You really need to do things that really feel hard. It feels bad. Things that feel good in trading are wrong. So the good trade is the hard trade. Then last chart before we go to the examples, trade management. So how do I determine if risk reward is above 3? And there's a couple of variations, and I always have kind of the same sequence I'm looking at. So you start with the stop loss and the standard target. Standard stop loss is always above the high of the day. That's the first option for your stop loss. You pull the stop, you pull your potential entry, you click here with the long short tool, you pull your stop loss above the high, and then the standard target for a normal multi-time frame trade would be the low of the day. That's your first option. And then you check what's the risk reward. If risk reward is 3, then you make a final check and you go for it. If it's not 3, or if it seems to be too far away, then you start with your options. First options, if risk reward is below 3, you consider a more aggressive stop, and that would be for me below the lower time frame structure, like a lower time frame swing point, behind the 8H level, potentially behind a 15 or 5-minute candle. These are the options on the stop side. And then on the target side, there is a couple of options. The most conservative option is just the other side of the 8-hour range. And you will see also in the examples, this very often gives a reaction. And it makes sense sometimes to just cut the trade there, because from there it bounces back up to the 618 maybe, or maybe even the whole trade. And why would you hold through that? It doesn't make sense. You better, if that's the case, you can better take the next continuation entry. So that's the first option. Second option, low of the day. Then if you're in a 3-star parabolic setup, you might go to previous day low, or you go to range expansions. Range expansions can be opening box, can be 8-hour range, can be the daily range, or even the previous day range. That depends on the pattern. You typically see that. And you play with these levels and always think about, does it make sense? Does this fit to my thesis? Is it explosive enough? Does it have alignment, or is it a nail and bail trade? Is it Tuesday or is it Friday? Very important. And then depending on that, you just hit it. You just cut the trade with the first level, or you might even scale in from there if it's a don't come back trade. You know, there is different variations. Then during the trade, there is only one thing I'm looking at: timing, of course, timing and levels. So if I cross a major level with major time rotations, I cut the trade right away. That doesn't make sense, because if you like it for a 1-hour rotation, if you hit the low of the day, I never wait for anything, because in 90% of cases it gives a very strong reaction, and then you better take the continuation. But why waiting for the reaction against your trade? I just make first touch exit, and this gives me very, very precise exits very often. Other than that, between time rotations, I have trade cutoff signals. So if I get a 5 or a 15 minute, depending on the setup, fake out against my trade, this is kind of a reverse entry signal. So it could signal a trade in the other direction if you have a 15 minute or a 5-minute fake out. If I see that, I cut the trade. If I'm in between somewhere, so it's too risky to hold, or if I'm in a don't come back trade and I'm already past my take profit levels potentially, then I sometimes hold on until I get the next fake out to get an even better exit. What's the final thought to trade management? Very important is that you are aware that a trade is a bet. So you don't force anything. You're not certain about the trade. You don't want to be right. If you take your entry with your plan, you throw the dice. You have a specific probability for this trade, and once you are entering it, you don't have any control anymore. You look at your rules, yes, maybe you cut it, but you don't overmanage the trade. You don't think, oh, it's pulling back a bit. Oh, now it's going fast. You don't play around with your trade management, because especially as a novice trader, you will make it wrong. Especially don't pull your stop loss to break even. This is something I almost never do, because it just doesn't make sense. Either I like the trade and I like what I'm seeing and I'm staying into it, or I don't like it. If I don't like it, I cut it where I am. I don't push the stop loss to break even, because sometimes, yes, you get a stop hunt. It hunts your stop and then you're out, and then it does the rest as you wanted it. So a stop loss to break even is a move out of anxiety that makes you feel good, and that's why it's dead wrong. Don't do it. So that's, in a nutshell, if I can say that, everything I do every day. This is my trade management, my entry process. No hidden things, no magic other than that. It's a very rigid process, and this is what I run every day. And now I will show you some examples on the chart, and then it will become even more clear, I think. Okay, first example. This is a reversal situation. What you see here on the chart, almost all the graphics on the chart, not everything, but most of it is done by my own indicator. I programmed my own indicator, TrendPredator Pro in this case, that reflects all my thinking, all my setups. So I have all the lines here, the high and low of the 8-hour, 4-hour, 1 hour. It shows me the fake outs and the breakouts with the bias. So once it trades through the 4-hour high here, for example, it shows me the 4-hour fake out high. Here I see the 8-hour still in breakout, so I don't want to trade into that. The daily is in breakout. So that's the graphics on the chart. Here in the table, you see the bias of the different time frames. Are they breakout, fake out on the current and on the previous candle? You see the Stacey Burke signals. Is it overextended, like 3 longs, 3 shorts, and also first red, first green? So here the lower time frames, the 4-hour and 8-hour, they show you the 3-session setup. Day, week, and month. Month you only see on the 15-minute and above. They give you the context. And here, this reads this table, and you see context. In this case, it means extended uptrend. The setup is dependent on 8-hour day and the higher time frames. In this case, breakout continuation, low-hanging fruit, meaning you broke out of the 8-hour, so you are in a long situation here, a trend long situation, 1-star setup. So I programmed more than 100 setup variations into the indicator, and depending on the area it's trading, it's showing me in real time what the current setup would be. This is very valuable because you don't have to think about it even. So you just look there, and once this shows you a long setup, I never go short. So this keeps you out of a lot of trouble, and you can focus completely on the entries. Then what I marked up here additionally is how I used to mark up my sessions, and I do this here to show you how these levels work during a session and how the session is structured. So we always have New York Open. That's a very important vertical level, but also horizontally. I want to see the New York Open level. What's the open price of equity open? You will see this gives a very strong line in the sand orientation for your trading. Then I have an indicator, a specific one for the first hour high and low, and for the open box. So the first 30 minutes, I will show you that. And then I'm marking the major time rotations. Here the ones that were relevant for the trade. I will show you this in a minute. So what's the trade? The trade is a reversal trade. I think I used this one in the last video already. I took it again. You see here you have 3 8 hours of rise, 3 8 hours of long. So you have an intraday overextended situation. You have the 3 longs on the day. So the day is also overextended, but it's bullish overall. So we are still in a very bullish overall situation, but overextended. So you want to be careful. If you're aggressive, you could take already the 4-hour fake out high on top here, but that's very risky. I wouldn't recommend that, especially not into New York Open. As we discussed, this very often gives the trap. And also you see here the indicator flashes a long setup still. So if you get a nice pattern here with a 15-minute fake out low, you might even go long from here. It's overextended, so be careful. So let's see how it trades. New York Open hits. What does it do? Then you see immediately here the levels for my open box start to draw. This is the open box low. It wicked to the low. Here on top you now get the 8-hour 4-hour high. It updates in real time, and this is the opening box high. So now you're trading within the opening box, and once you're within that, you don't take a trade. You want to see the breakout, or you take a short within this range. Doesn't make sense here because we are even in a 4-hour breakout. So nothing to do for the moment. We just observe and let it run. Now we come into 3rd hour. My first entry window, but you see it's still in breakout 4 hour, 8 hour in breakout, still flashing bullishly, still trading inside the first hour high and low, still trading inside the opening box, still trading above the New York Open level also. So that's kind of time engulfment. Then let's look what's happening. Pushing back up, and this is very nice. I want to see this. Here you see the lower time frame fake out high. That's the 5-minute fake out high that trapped the longs one more time before you then get your engulfing candle, engulfing the 4-hour fake 4-hour high, making this a fake out high. And then you have here a very nice overall structure on the higher time frame. You could say this is kind of 3 pushes to the high, so that's a very nice trapping pattern. You have here a 5-minute fake out high, and then you get a lock-in. This is very nice. That's what you want to see. Good. Then we are approaching 30-minute time rotations, and it crossing here. You see it. It's like precision clockwork. 30-minute time rotation crossing the 8-hour high, making this an 8-hour fake out high, and you see immediately the indicator jumps to reversal high of the day, counter trend trade, but 2-star because it's in 3 hours of long, it's overextended. So it even considered the quality of that. And then I would not wait for anything, because this is then a very parabolic situation. The trap is clear, and then you just hit it as it crosses this level here. And then let's think about trade management. You see here, that's the long and short tool I use. As I said, you would start with the high of the day. Doesn't look good, no chance. You go to the next swing point, no chance, too far away. Then you see here the 8-hour level. So you want to be behind the 8-hour level and maybe behind the last 5-minute candle. This makes sense, I would say. So this would be how I place my stop, behind this wick, above this wick here. This is a nice place for the stop, yes. And then you go to the other side. What did I say? First is the 8-hour range, 8-hour high, 8-hour low. This one is the 8-hour range low. That's the first target, and I think it's also low of the day. No, low of the day is a bit lower, but the 8-hour low is already 4.5 R. That's enough. I don't need anything else. And then this would be my hypothesis for the trade. Let's see how this works out. 1, 2, 3 candles. That's my typical trades, if you know me. And you see here precision clockwork, 30-minute, no, it's a 15-minute time rotation, 15-minute trade, 15-minute time rotation, hitting the 8-hour level. My take profit. I don't hesitate a second. I cut the trade here. That's it. 4.5 R, perfectly aligned with the setup, with the time rotations. Cut the trade, take the money, call it a day. And then let's see what would have happened. It smashed into the daily here. It made a pullback, traded back down, but then coming back up. It's late in the session. It's just grinding sideways. This is nothing you want to trade. That's the trade. So that's the reversal situation. And now let's look at some other situations as well. So next one. This is a parabolic long. So not a reversal entry, but it's a continuation long entry. You also have, of course, to consider these entries both in the other direction. You have also reversals from the low long and also continuations to the low short, but the logic is exactly the same. So let's look at it. What do we have here? So here we come into New York Open, already marked. And you see we already are in 8-hour breakout. Yes, it's 3 long, but in daily breakout. First green day, week, inside week continuation. Very nice, fake out low. So this is very bullish and parabolic. You see here, it's a green uptrend, so it's a healthy uptrend. Breakout continuation, low-hanging fruit. Low-hanging fruit in this case means it's an 8-hour continuation breakout trade. It's a trend trade, 2-star quality because of the 3 longs potentially, and maybe also the higher time frames are not fully aligned, the monthly or so. So we come into New York session. New York open is here. You see that's the first hour high and low. We don't trade the open, so we just wait what it does. We let it run into the open. Then you see here already how the open box is drawing again. So that's the first thing you want to see. Where's the open box? Then you see here you get a pullback. That's very interesting. Pullback into the 8-hour breakout level. And once I see that, again, 10 o'clock time rotation, exactly the breakout level, then I will be very aggressive with such an entry. You see here the next candle turning around. Here you get a 5-minute fake out low. Maybe not that aggressive here, but this one I would definitely take as a continuation breakout trade above these levels. How would I plan this trade? You see the opening box. If I take a one full expansion of the opening box, the opening box is from here, New York open level, to here. I take one full expansion. This is my first target for such a trade. I plan the trade. You see here, this is already 120 pips. So I'm above the 8-hour level, and then, as I said, I look for range expansion. It's a parabolic trade, very nice. So opening box, range expansion is the first one that makes sense here. The 8 hours would be too far away. So that would be my typical target. Stop loss, I would, in this case, behind the 8-hour, again with some space. And you see it's easily 6R, so this is already a very nice situation. Nothing else to consider anymore. So we let it run from here. You see it breaks out of the first hour high and low. That's nice. Does another 5-minute fake out low. Then it trades into the 8-hour high here. So there you want to be a bit careful. But then it breaks out again. You can even, the breakout could be even another position. Then it's going slow, but never really pulling back. So you could hold on to that. And then it hits the 1x range expansion and does a 5-minute fake out high. And it's also here a 30-minute rotation. This would be my exit of this trade. And then you see what does it do afterwards. It's just going sideways. And you see how nice this range expansion level works. To double top into this range expansion and then doing nothing. So here you want to be out of the trade already. No point holding on to that. Very nice trade. R6 breakout continuation, low hanging fruit trade. So another one. This is a low hanging fruit trade. So here you see 8-hour high and low. You see we are in a daily fake out lows, 3 days of shorts. So it's still bullish as we trade here. And you also see here context reversal continuation, meaning it could be that it reverses here and continues further up as long as we are trading above this daily level, you know, bullish above, bearish below. As long as we are trading up here, no shorts, but also no longs in this situation. That's why it also doesn't show a setup even, because the week is in breakdown, first red week, so you have very strong higher time frame bearish pressure. So you definitely don't take a long trade from here. So from here you then watch what's happening. New York open, you have the first hour high and low, you have your 8-hour high and low in place, and then you watch what's going on and you wait for the opening box to be determined. Let's see here. That's the opening box, high and low. Interesting. It's breaking out of the opening box. You have a daily breakdown now here. This was crossed. You have a 4-hour breakdown. Down here you have even an 8-hour breakdown. And you come into the 10 o'clock situation. low-hanging fruit. It's not strong enough to take this parabolically. I wouldn't take this as a breakout trade. For this, it's not parabolic enough. So the setup overall would look nice, but I would still observe it further. Especially also here, you have previous day close. You don't want to trade through that, so you observe a bit longer, and you see it's coming up again. Very nice. So that's the daily breakdown level was up here, so it's trading back up, giving a retest, and then you get another fake out, another lower time frame peak formation. And this one, it's if you would go to the 15-minute, I don't want to switch around now, you would see that there is a 15-minute fake out high continuation confirmation, and then once this loses this 8-hour level, then you have your lower time frame trap. So here you wouldn't have one. This is too far away. That's not strong enough. So I wait for the lower low, then it comes up, and then you get a nice peak formation here. So this is then your trap. And then you take the cross of the 8-hour level here with 15-minute rotation. This is pretty nice. I would then aggressively take the cross of this level, and then let's see how we would plan this trade. Above the high, that's too far. That's 75 pips. Doesn't work. So again, my typical variation behind the 8-hour, behind the last 5-minute bar, maybe with a bit of space here, 30 pips. That makes sense. And then to the low, in this case, I think I took the 8-hour high and low exactly. That's a nice, that would be in this case the range I would go for. 8-hour range expansion, one full expansion. The opening box would give a similar result, but in this case, as we've had a huge pullback, I think the opening box was already the first move down. So now you look at the 8-hour range expansion. This would be down here. You want to be careful with previous day low as it trades into that. So planning the trade could be even to this here. That's R3. So it would be absolutely valid. My typical trade, 3 5-minute bars cut with this level. But it's overall a pretty nice template. So you could also go to the one full expansion of the 8-hour. That's R5 then, as a potential variation. And from there, you could even hold it on longer if you like, if you really like it, and bet on an ain't coming back trade and go for the 15-minute fake out low. This would be R6 then. I can show you that. That is my final cut-off signal typically. So if you look at the 15-minute, then you see this on the 15, this trades nicely down. And then you get a 15-minute fake out low that closes bullishly here. This would be your final exit confirmation once you want to hold on to that. I typically don't do that. If it's above R3 or around R3, I just bail out here or maybe there with a 1-hour time rotation is a nice exit. But as you see, I mean, here nice 3 pushes down, could you say, and going into the 4-hour close. So if you like, you can hold on to that. That depends on your risk ability to hold such trades. I typically just take the money. So this would be a low-hanging fruit example. There is one example left. So here now, final example, just to show you how it looks like if it's no trade. So here, very conflicting situation. Day is in fake out high, weak, inside weak expansion, 8-hour fake out high. So very conflicting overall signals. And then you see here the first hour high and low of the session is very wide. So this is what you don't want to have. Trading inside the first hour high and low. Then we come to New York Open. You see the 8-hour is here, fake hour, fake out high there. It just prints the opening box You see here, stays inside the opening box, stays inside the first hour high and low, and just goes sideways into third hour. Next 1 hour rotation, tries to go down, but also comes up again. So here you see, once you have this first hour high and low, your opening box high and low, and your bias levels, if it's just ranging, if there is no clear signal inside that, then you just don't take any trades. You have seen in the other examples, they are very clear. You have a very nice setup, very nice bias, very nice trading around these levels. If you see anything like that, you just ignore it. There is nothing to do. I hope you liked it. If you like this style of trading, feel free to join my Discord. We discuss this style, these trades every day. There is my playbook. There you can see the indicator. It's available for a free trial. Like the video, subscribe to the channel. I will give much more of these updates, and I also update in my community a lot with these documents and all kinds of videos around my trading style. So I hope this was helpful. Thanks for listening and have a nice day.